Journey through time, tracing the evolution of money from barter to Bitcoin. Intriguing, isn't it? Welcome to TopThangs, dear viewer. Today we will briefly explore the history of money and financial systems. So don't be greedy with the like button and let's get this started. Following the primitive age, we find ourselves in the era of the barter system. This system was the first form of trade where goods were exchanged directly for other goods. Imagine, instead of money, you're trading a bushel of wheat for a pair of shoes. Sounds simple, right? But it wasn't always so. The barter system had its fair share of complications. For instance, the double coincidence of wants was a major drawback. This meant that trade could only happen if both parties desired what the other had to offer. Let's say you have wheat but need shoes, and I have shoes but need rice, not wheat. In this scenario, we would not be able to trade, leaving both parties unsatisfied. Moreover, there was no standard measure of value. How many bushels of wheat equal a pair of shoes? How many apples equal a knife? These were subjective and often led to disputes. As societies grew and goods became more diverse, these problems became more pronounced, leading to the decline of the barter system. It was clear a more efficient system of trade was needed, but what could possibly replace such a widespread system? Well, we'll find out. As we left the barter system behind, a new concept emerged: currency. This was a revolutionary idea that changed the face of trade forever. In place of the direct exchange of goods, people started using objects as a medium of exchange. These objects varied from region to region, depending on what was considered valuable or abundant. In some societies, shells were used as currency, while in others it was metal coins or even pieces of paper. The crucial point was that everyone in that society agreed on the value these objects held. Suddenly, the double coincidence of wants was no longer a problem. You could sell your bushel of wheat to anyone who wanted it and get coins or shells in return. Then you could use those coins or shells to buy shoes, even if the shoemaker didn't want wheat. Currency also introduced the concept of a standard measure of value. Now, we could easily determine how many coins a bushel of wheat or a pair of shoes was worth. This made trade more efficient and disputes less frequent. However, currency was not without its own set of problems. For one, it required trust in the system. People had to believe in the value of the currency and that others would accept it in exchange for goods. Also, it was susceptible to counterfeiting and inflation. But these were issues to be tackled later. For the time being, currency was the solution that societies had been looking for. But how did we go from shells and coins to the digital money we use today? Let's dive into the story. With the rise of currency, societies began looking for ways to standardize and secure their newfound medium of exchange. This led to the adoption of the gold standard. The gold standard was a financial system where a country's currency or paper money had a value directly linked to gold. Countries would set a fixed price for gold and buy and sell gold at that price. This meant that the money they issued had a direct and fixed value in relation to gold. This was a significant step forward in the evolution of money. It provided a universal measure of value and created a more stable and reliable system of exchange. Under the gold standard, inflation and counterfeiting became less of a concern, and international trade flourished. The gold standard acted as an automatic stabilizer for economies, as the amount of money in circulation was directly linked to the nation's gold reserves. However, the gold standard was not without its flaws. It didn't account for economic shocks like a sudden gold discovery that could devalue the currency. Additionally, maintaining a gold standard required a lot of discipline from the government, which was not always possible. Despite these challenges, the gold standard played a crucial role in shaping the financial systems we have today. It paved the way for a more sophisticated monetary system, which we will explore in the next scene. But remember, the key takeaway here is that the gold standard was another step in the evolution of money, moving us closer to the digital currencies we use today. Following the gold standard came the advent of modern banking and fiat currency. As economies grew more complex, the need for a more flexible and responsive system of money became apparent. This gave rise to modern banking and the concept of fiat currency. Fiat currency is government-issued money that isn't backed by a physical commodity like gold or silver. Instead, its value comes from the trust and confidence people have in the government issuing it. This was a revolutionary concept, as it meant that governments could adjust the supply of money in the economy to meet changing needs, such as during times of economic crisis. Modern banking also played a crucial role in this evolution. Banks began to act as intermediaries, facilitating transactions and creating money by lending more than they hold in deposits. This is known as fractional reserve banking. It made money more accessible, but also introduced a new level of risk into the financial system. Banks, through their lending and credit creation, became key players in the economy. They could stimulate economic growth by increasing lending or slow it down by tightening credit. This new system allowed for more economic stability and responsiveness, but also required careful regulation and oversight to prevent abuse and ensure trust in the system. This phase in the evolution of money was marked by increased complexity, but also greater flexibility and adaptability. It played a significant role in shaping the modern global economy, paving the way for the next big leap in money's evolution: digital currencies, which we will explore up next. But for now, it's important to understand that modern banking and fiat currency were key stepping stones in our journey towards today's digital age. Stepping into the digital age, we now arrive at the dawn of digital currency and cryptocurrency. As the internet began to permeate every aspect of our lives, it was only natural that money too would become digital. Initially, this took the form of digital representations of traditional money. Think online banking and digital payment services such as PayPal, where you could send and receive money without ever touching a physical banknote. This was a significant shift, as it meant that money could now flow instantly, across any distance, with just a few taps on a screen. But the truly revolutionary change came with the advent of cryptocurrency. In 2009, an anonymous person or group known as Satoshi Nakamoto introduced Bitcoin, the first decentralized cryptocurrency. Unlike traditional money, Bitcoin isn't issued or regulated by any government or central bank. Instead, it's governed by a decentralized network of computers around the world using blockchain technology. This system allows for peer-to-peer transactions to occur without the need for a central authority or intermediary. The value of a Bitcoin, much like fiat currency, comes from the trust and confidence people place in the technology and the underlying mathematical algorithms. Cryptocurrencies offer a level of privacy, security, and freedom that traditional banking systems can't. It's a bold new step in the evolution of money, one that could reshape our global economy in ways we can't yet fully understand. While the future of digital money and cryptocurrency is still being written, one thing is certain: money as a concept has evolved far beyond simple exchanges of goods and services. It's become an integral part of our digital identities, shaping and being shaped by the technology that drives our modern world. As we move forward, who knows what the next chapter in the story of money will be. Whatever it is, it's sure to be an exciting ride. And with that, we close our journey through the evolution of money. But remember, as with all things, change is the only constant. Thanks for watching TopThangs, fam. You already know the deal. If you have a topic you want us to explore, just drop a comment, like the vid to show us some love, and subscribe if you haven't. But don't hit the bell icon. If you know, you know. See you on the next one.